Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Tuesday, October 2nd, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, basics of it. Market again gapped higher, much like yesterday. Could not hold the gains even as long as they did yesterday. And again, yesterday you saw a gap up and a surge at 10 o'clock on the ISM. Today the market's just had a gap up and that was it. We came straight back in, bounced off gap fill, beautiful bounce off gap fill. If you're an intraday trader like we are in the intraday stock chat here at In The Money Stocks, that was just a no-brainer. Pierce the 200 right to gap fill, you buy right there, and look at the huge bounce back up. All right, after that bounce, it comes right back in. Bear flags it. You know enough not to buy that same level again, hopefully, if you're with us here at In The Money Stocks, and the market collapses down. Pivot low, that's a buy. First hit of a low from yesterday, you buy it, market bounces up. We chop sideways, bullish consolidation pattern. You know not to buy that pattern because of the two moving averages just above, keeping wraps on the move. Sure enough, it rolls over, and we're now hovering basically at the lows of the day. You obviously would not buy the second hit over here of the low as well. Likelihood of a breakdown is continuing to advance. Support levels on the downside. This is a very bearish chart set up right now. It tells me personally there's a good chance we do go lower into the end of the day. And the next support level will be right here. There'll be a little bit of support right there, and then the green line just below, guys. Green line is the low going back to last Friday. All right, now, I will definitely be looking to buy the low from Friday. There's no doubt about it. Just as a day trade, of course. As a swing trade, I still think the market has a lot of trouble here. From everything I'm seeing, it definitely is showing us some problems out there. Continue to loom. And again, Fed announces QE3 Unlimited. Markets get a one-day bounce, and that was it. And again, we talked about the likelihood of that happening. If you know the methodology, if you know the PPT methodology, then you can ultimately understand how that will work out and continue to fall over and roll over. All right, so that's what we have here, guys. And again, markets continue to trade into the lows of the day. Let's just go over a couple different charts as the spiders remain down 27 cents on the day. S&P down 2.5, NASDAQ down 4, Dow down about 61 points on the day. Taking a look at the key stocks out there, you want to take a look at Apple, number one. Apple continues to see selling pressure. All right, yesterday we got a little bit of a bounce at the low of 656 or so. And that took us into today, and then it just rolled over again. The daily chart's really what you want to pay attention to right here on Apple, and that is the 50 MA. There actually should be very good support here on a swing trade basis at the 50 MA. You just have to be careful, guys. You have to be very, very careful because while this level is good, if the markets decide to really flush and correct, it should get broken. I still think there's a higher percentage chance of a bounce here, probably 60-40. But it's not at the utmost length. It's not like a huge, huge advantage like 90-10 or anything like that in terms of positives to negatives, in terms of the trade working out or not working out. All right, so that's what we have there on Apple. Very important level right here. By the way, if this level does break, Apple could easily and will ultimately go down here. This is where Apple's headed. If it gets a bounce off the 50 moving average, great. You know, maybe that 1, 2, 3 day bounce. But ultimately, you will head lower, and you're going to 620. 620 on Apple is your ultimate target. Google continues to pull back here, guys. Great pullback. The topping tail over here is continued to be valid. Even though we kind of went up and tested, we even broke the high of the tail. For those of us that know the methodology, we know the topping tail is still 100% valid there. And sure enough, Google now down $9 on the day. Great pullback as it continues to see some further downside. JPM is down on the day, down about 18 cents. Bearish. This was a bullish pattern as it pulled back. It's now more bearish than anything. I mean, this is more than anything a failed bullish pattern in my book. It still has a small chance to advance back up, but it wouldn't have a lot of strength. And when it breaks and closes below this 20 MA on the daily, this thing is done, folks. I mean, it's absolutely done at that point. Okay, so we'll just continue to watch that as well. I want to keep a close eye on it, see how it continues to play out. And, you know, again, just continue to follow, and let's see how things maneuver here. Okay. Scanning through a couple other charts, Goldman Sachs is still positive, so while JPM is negative, Goldman's positive. But again, it's pulled back off the highs of the chart. You can't like that. I definitely am not a fan of that chart based on how it's reacted the last 2 days. Those two tails, while they're not topping tails on Goldman Sachs, they're very bearish. Make sure you understand that, guys. Let me just see what else we have. Chevron up a little bit, Exxon down a little bit. Nothing doing there really. And again, just kind of looking across the board, Caterpillar is a good one to look at, down $1 on the day. That's an ugly 1 week chart. I mean, just going back, 5, 6 trading days, pretty ugly chart there, guys. In fact, very, very ugly. All right, Caterpillar. Let's take a look at 3M. Yeah, 3M seeing a little bit of selling. IBM made new 52-week highs yesterday, but look at that beautiful pullback today. That's actually a reversal candle. If it were to close back below the previous high pivot right here today, I don't think it will do that, but if it does and we sell hard, that would be extremely bearish for the chart. Extremely bearish. Okay? All right, guys, I'm just trying to scan, see if there's anything else out there. But for now, I think that's about it. Let me just punch up the spiders again. Let's bring up the 10-minute chart. And you can see the spiders just made a new intraday low, but are bouncing back up. They're trying to hold this pivot low. The pivot low from yesterday they're trying to hold because they know if they break this, this could go down to Friday's low very, very quickly, guys. And I think it will do that, personally. All right, have a great afternoon, great evening, folks. Come join us here at InTheMoneyStocks.com. Learn the PPT methodology, which will help you make profits in any market condition type event. Profits on the long side, on the short side, just doesn't matter. The charts will ultimately tell you exactly where it's headed. Take care.